All right, ladies and gentlemen, it's May 2nd. Tomorrow is May 3rd, 2023. We get Jerome Powell and the Fed at 2 p.m. Eastern. And I got some gold for you. One, you better watch what happens with gold tomorrow. Again, the reason why tomorrow is such a big deal, people are anticipating a Fed pause. But let me just start off right away. I'm going to tell you this right now within 10, 30 seconds. I don't know how long it is, but simply, tomorrow we'll have a lot of volatility at 2 p.m. Eastern. That is when the release comes out, and depending on what is in the statement, comparing this to the last 12 or so FOMCs, there is potential for statement changes, and that could lead to a ton of volatility on the release. So that's your first piece of gold. That's what we're going over now. But actually, before I tell you about the second piece, you know why I'm wearing the tank top? Because one, I was wearing my pajamas and then I had to change because it was messy, but I thought I'd show you this wicked two-tone sunburn. You see that? I wore a different tank top last weekend and then I wore another one. So now I got a two-tone. It's all right. Anyways, but that's the first one. But now, number two, you got to understand this about tomorrow. Tomorrow is not the most important Fed meeting. I know I say that a lot, and we've discussed this. We even said this about the last Fed meeting. Well, guess what? This one doesn't really matter that much. That's why it's going to be interesting, because if there is a change in the statement, then tomorrow could get pretty wild. If there's not, it might be a low-key dud. And why do I say that? Because the next meeting will be 4 weeks out in advance, and that one will include a summary of economic projections. So that's number two. And then finally, number three, it relates to point number two. Believe it or not, right now on this Fed meeting, this is actually one of the lowest priced in volatilities in the last 12 months out of any of the Fed meetings. So it's kind of weird considering what we got going on, the bank failures and all of that, but the market's only pricing in about 1.5%. We went over this today. JP Morgan, they came out with their estimates on what they think could happen in certain scenarios, but they're only anticipating 1.5%, even on a surprise, maybe 2%. Man, a couple months ago, we were watching 4.5%. Even if you take the one-day VIX and extrapolate it, the one-day VIX is even at the lowest point if you try to base it off of other times, again, before it was invented. But that's what's wild about this, is that it's kind of highlighting, even though there could be big changes, believe it or not, there's not that much priced in. So that's the big deal about tomorrow. Hopefully you liked the video. Hopefully we see you there live. Again, we do it all live tomorrow. Real-time analysis, sunburn, and everything. I keep looking at this. Is crazy. Anyways, but youtube.com/the stock market. We'll see you there. It's going to be fun. But now that we've gotten the easy stuff out the way, I'm going to reiterate what I said earlier at the beginning of the week, but it's what we talked a lot about today. And I'm going to share with you what I expect, because people disagree. So Bloomberg, I know they have a different consensus. I think even JP Morgan, they believe something, but they agree more in line with Bloomberg. And really, there's a lot of people spread out on this. This is why, even though I don't think tomorrow's the most important per se, it's interesting to see that there's a lot of diversion. Tomorrow, we either get a clear-cut announcement of a Fed pause, or we get a rate hike and no clear-cut announcement, and then one more rate hike kind of in the same place, borderline what we got last time. Those are kind of the two scenarios, but obviously the overlying main theme is, does the Fed pause or not? Hopefully you understand that about tomorrow. So again, the release comes at 2 p.m. Usually the volatility happens at 2:30 when Powell comes on for the press conference. In this case, if the statement changes, 2 p.m. will be the volatility, but also 2:30. So keep that in mind. But now, what do I expect? I said this the other day. I expect this statement to read exactly the same as last time. That phrase about what is it? More additional policy firming. I don't think they're going to change that, and I think they're going to maybe change certain things about the economy. They may change words like robust, and then that's it. But realistically, I think the biggest change will be, do they change that statement of additional policy firming? Do they keep it the same or take it away? away. Now, this is where a lot of people disagree with me on it, because now a lot of people, Bloomberg and again, other analysts out there and people who are Fed watchers more or less, what they are expecting is that the statement will change. So they believe the statement will change and they're going to get rid of additional policy firming. And instead, it's going to say that we have now reached sufficiently restrictive. Guess what? This is all you need for tomorrow. This is the beauty about this video. This is the beauty about tomorrow. It shouldn't be too important, but it really could be. However, two things you need to watch for. Two very simple phrases, and depending on how they're used and when they're used, that will cause their biggest reaction or no reaction at all. The first one, additional policy firming, or two, the use of the phrase, we have reached sufficiently restrictive. If they say that, that means they're done raising rates and they believe it's now time to pause. That language will clearly communicate a pause. If they say additional policy firming, it means, yes, maybe there is a rate hike, maybe there's not. It's the same situation we were into coming into all of this. So that's the beauty about it. That's what we're looking for. A lot of people are thinking the statement is going to come out dovish and then Powell is going to come out hawkish. I'm standing on the opposite right now, and I think the statement is going to read the exact same. That's why in writing, Powell doesn't have to corner himself, but the real reason why I believe this is because we've documented this change. So again, I could be totally wrong, and I'm glad I'm making this bet on this one because, again, the next month is going to be more important anyways. I don't think we have a lot to lose swinging or being prepared in this event. So, we're going to shoot, baby. But the way I'm looking at it is the last 12 months, it took them 12 months to change from, we see more rate hikes, again, we're going to keep raising rates, to this additional policy firming. It took them 12 months to just make this simple change. I don't think they're only going to ride it out for 1 month and then already go to another change. I think Powell wants to squeeze out time from all of this, and I think that's exactly what he's going to do. Keep the statement the exact same, and that's why it will be hawkish, because people will be expecting a more clear-cut pause signal, and I just don't think that's going to happen. It'll give him some of that clear-cut room. And then my opinion is that Powell, during the press conference, that's where he's going to signal at the press conference and pretty much say, hey, if credit tightening from the banks and all of the previous hikes we've done, if we start to see that having an impact, then yeah, I could see the rates at sufficiently restrictive. I could see Powell talking about that in the press conference and then saying, yeah, sufficiently restrictive and hold. And then pretty much that would be the dovishness of tomorrow. And that is what could kind of level it off. Pretty much statement brings us down. Powell brings us up. A lot of people right now think that the statement will bring us up and that Powell is going to bring us down. So, like I said, the phrase you need to watch for, additional policy firming and sufficiently restrictive. These two things, depending on when it's used, and this is the beauty of it, because if the statement changes right away and says, we're sufficiently restrictive, then that's it. Then, a lot of people, that's going to be 30 minutes of people eating that up until the pause, and even watch the bonds. Again, we talked a lot about bonds. That bond play, I even went up on it today, which is amazing. But if you were seeing it, again, bonds are going to be wicked tomorrow. So keep that in mind and watch. But like I'm saying, right at the statement, we should have an idea, and that will create all of the movement until the press conference. But that statement stays the same. Watch for Powell, but I think it will be a negative reaction if people don't get it all clear sign, because then now we have to wait for more data and play that game for another month. And then, well, yeah, you see how everything is with all the earnings and all of that. So that's pretty much it, Chad. I think it's going to be super simple. Like I said, it shouldn't be that important. We know if it is, if they make big changes to the statement, Powell really wants to signal aggressive and kind of corner himself with what's going on right ahead of the SCP. I mean, by all means, but otherwise tomorrow could also be a very chill day. But if you're prepared for both sides, I think you're going to do well. I would definitely watch out for the bonds. And again, like what would happen with the bonds if Powell signals a pause? you know, even though we're fighting and saying that rates might come back up because Powell will keep it longer, the immediate reaction will probably be TLT, IEF, that all goes up, aka bond yields go down. That's usually what happens after the last hike. So if that happened tomorrow and Powell did clearly signal a pause, that would technically be the last hike, and usually bonds do catch a bid from there, although maybe by the next meeting, a couple meetings, the bonds could come back down if Powell doesn't budge at all. But then again, that's a whole new conversation at that point. Otherwise, what could make the bonds go down is if Powell raises rates, leaves the door open, and then shows no panic about the banking situation, then bonds could go up. But that being said, before I end this video, today was a wild day. The regional banks hit a new low, 10% lower than their previous lows. A lot of banks, it was like a delayed reaction from FRC. So a lot of that stuff could factor into bonds too. And depending on what Powell says, we got to be watching out for that. And then, of course, Apple earnings and then everything else. But Chad, that is everything. I hope you're ready. We're going to see you in the morning. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember who you are comes out in what you do, baby. That's it. The real you coming out anyways, so you better focus on that. Keep the maintenance. You know, do it for the right reason. Be yourself, baby. Stop it. Stop. Y'all feel me? Y'all feel me? Come on, don't let two-tone. Don't let two-tone, suntan, sunburn get y'all. That's what you could call me, two-tone. I'm leaving. I make it awkward every time. Okay, oh, that armpit here. Oh.